Hello, everyone. So, welcome to the stream today. Very much excited for having you once again on the stream. Today is day number 5 of the executive Q&A session with Nhyira Premium, and today we are focusing on audit and assurance and advanced audit and assurance. I see some of you joining on the YouTube channel. Very much excited for having you. Give us a thumbs up on the video if you join on YouTube. For that way the video gets more engagement and YouTube will be able to push it out for more people to watch, and so we can assist a lot of people across the country and across the continent. So for those of you watching on YouTube, give me a thumbs up on the video, and if you have not subscribed to the channel, come on, what are you waiting for? Subscribe to the channel and become a VIP member of this channel. That way you will be able to get access to other information and other things that we do a lot on this channel. But most importantly, I want to comment in the chat box. In case you want to join the meeting on Zoom and speak with me directly, the meeting ID is in the chat box for those of you watching on YouTube. 863-9321-0684. That's the meeting ID in the chat box, and you can take it up and then join the stream with me on Zoom here. And I see Miles Green, I think so, joining the stream here on Zoom. Others are also joining here as well on Zoom in that case. All right, so I see you guys giving the thumbs up on the YouTube. Thank you very much. Thank you very much. I really appreciate your support for what we are doing on this channel. And in case you are watching and you've not given us a thumbs up on the video, come on, give us a thumbs up on the video, and also invite your friends and your colleagues who you know must be part of this stream to be able to study and ask me any questions on audit and assurance and advanced audit and assurance. So I see a comment from Kinbi Ej Ofosu. I think maybe you're saying hi. There is an emoji. Maybe I guess you're saying hi. Hello, Kinbi Ej Obeng. Okay, so see some people joining as well on the Zoom call here. Patrick Quenin, all right. So you are welcome, Patrick Quenin. I believe you guys are all doing well, and we are continuing with our discussion with the executive Q&A session with Nhyira Premium. Today is day number 5, and it's been very interesting so far, I must say. And for those of you who have joined the stream since Monday till today, I really appreciate what you've done and the way you've been sharing the content and also giving us a thumbs up on the video. Really appreciate. God bless you. And we want to do this because it's a way that we can assist you so that this time that you are doing a lot of studying on your own, you have a lot of questions to ask, and there are a lot of things that you have challenges in. That is why I put this week down so that I have this executive Q&A session with you guys so I can assist you in order for you to prepare well for your examination. So YouTube, for those of you watching on YouTube, if you have any questions, put it in the chat box. I'll be reading all of your comments and answering all of your questions as well. Then if in case you're on YouTube but you want to join the Zoom call, the meeting ID is in the chat. You can scroll above, you can see the meeting ID, and you'll be able to join the stream right here. For those of you who are on Zoom also, if you have any questions, you know what to do. You click on the more button, and then you will see raise your hand. Then once you click on that, I'll be able to get the indication that you raised your hand. Then I'll call you in for you to ask your questions in relation to that. This is a Q&A session, guys. So I want you guys to bring a lot of questions to me on various issues, on various areas, so that we will be able to go through with that. Miriam Kachale. Hi, Miriam. It's been a while. The last time we had a discussion on I think on the Instagram. I believe that you are doing well and you are preparing as well for your exams in relation to that. So you're welcome to the stream today, Miriam. Okay, give us a thumbs up on the video. In case you've not given us a thumbs up, give us a thumbs up on the video on YouTube. That way we get more engagement on the video. So I see other people also joining here on the Zoom call. If you have any questions, you know what to do. Click on the more button on your screen, and then you will see raise your hand. When you click that, I'll get the indication that you raised your hand, and then I'll be able to bring you in. Then you ask your questions, then I'll answer them for you. For those of you on YouTube, comment in the chat box with all of your questions. Right, so audit and assurance, advanced audit and assurance. So we want to look at these two areas. They are closely related, only that when it comes to the advanced audit and assurance, we going to be taking that to a next level and then look at it in relation to that. Miriam said, thank you very much on YouTube. You're welcome, Miriam. You're welcome, Miriam. So let's get into the discussion for the day. I see some people joining again on Zoom here. If you join the call and you have any questions, you know what to do. You raise your hand and I will call you in, and then you ask your questions in relation to that. In case you are doing level 3 strategic case study and you are watching either on YouTube or you're on the Zoom call here and you have any questions on strategic case study also, you can bring it up. All right, because yesterday we made a provision for, no, 3 days today, Wednesday, we made a provision for case study, but we still didn't get as much response as possible. So for those of you on the call here and you are doing strategic case study and you have any questions on strategic case study, or you are watching on YouTube, make sure you comment below with any questions you have on case study as well, and I'll be addressing all that. I see Vincent Bosta. Vincent, I believe you are also doing well from Tanzania. Thank you for joining the stream. Give us a thumbs up on the video if you have not given us a thumbs up. That way we get more engagement on the video. Right, so when it comes to audit and assurance, advanced audit and assurance, as always, let me start talking and taking you through a couple of things. Then as and when questions come in, I will pause and be answering your questions for you. Please, this is a Q&A session, so don't leave me alone to be talking, all right? Once you have a question, you put it in the chat box. For those of you on YouTube, and for those of you on the call here with me on Zoom, you can just raise your hand using the raise hand button, and I'll call you up to ask your questions. So when it comes to audit and assurance, as well as advanced audit and assurance, there are a couple of issues that are fundamental that we must understand in order for us to become successful and excel in the examination. So whether you are doing audit and assurance level 2 or advanced audit and assurance in level 3, there are some basic concepts, basic principles that you must understand. And so I want to set out those fundamental concepts, those fundamental principles before we get into each of them in relation to that. I see a comment from Saidu Mohammed. He said, thank you so much. You are welcome, Saidu. I believe you are doing well. If you have any questions, put it in the chat box and give us a thumbs up on the video in case you've not done that. So when it comes to audit and assurance, there are a couple of things that I refer to as fundamental topics that you must know about, whether you are doing level 2 or level 3. So fundamental topics or fundamental issues. The first thing that you must be aware of is the issue in relation to the role of the auditor, or let me put it this way, appointment of the auditor. It's very important for you to understand the issue about the appointment of the auditor. How is the auditor appointed? Who has the right to appoint the auditor? What are the roles of the auditor? What are the responsibilities of the auditor? What are the rights of the auditor? So all of these issues come under this broad heading here about appointment of the auditor. So one, we have to talk about the issues in relation to the factors to consider before accepting an audit appointment or an audit engagement. Aside that, we need to look at the issue in relation to the role of the auditor, role or responsibility of the auditor. We have to also look at the issues in relation to the rights of the auditor. And then the last thing there is who qualifies to be an auditor. So qualification of the auditor. So when it comes to this broad heading, now I'm not looking at like topics to be specific. I am just having some generic headings under which I classify some things. All right. So it is not really some of these things are beyond a couple of headings, but I'm just going to be classifying them under some headings in order to assist me to explain what I want to explain. So on the appointment of the auditor, we must find out, okay, what factors do we take into consideration? So if you're an auditor and you receive a letter from a client entity saying that, hey, we want to give you a job, we want you to come and audit our financial statements. What factors do you consider? Now, you must understand the various factors you consider before you going to be accepting the audit. The issue about independence of the auditor, very, very critical. Very, very critical. The issue about understanding the client entity, understanding the nature of the client's business, understanding the industry that the entity is in, the expertise or the resources you need to actually carry out the audit in relation to that. So you must take into consideration all of these factors, who the management of the companies are, and then if this is not the first time the entity is appointing an auditor, you must consider speaking to the outgoing auditor with permission from the client entity to speak with the outgoing auditor. Then you have to ask the outgoing auditor whether there is a reason for you not to accept the audit assignment. The reason why that is important is that the outgoing auditor might have an information that is vital, that is material to your audit in relation to that. So you must speak with the outgoing auditor in relation to that. So when you speak with the outgoing auditor, probably the outgoing auditor had not been settled properly, or he has not been paid fees due. Then you have to ensure that your client entity pay them the fee due. If they are not ready, that means that you too, when you undertake the work, your fee may not come in relation to that. So as an auditor or as an audit firm, before we say, we write an engagement letter to say, okay, we have accepted the audit. This is how we're going to be undertaking the audit. This is the times that we are going to be coming to visit or to do various things or undertake various things and the client entity or the client firm. We must consider all of these factors in relation to that. Primarily, all of these also will boil down to the issues about independence that I mentioned earlier. So whether you are doing advanced auditing, even advanced auditing, this area is very, very critical about that. And then in level 2 audit and assurance also, this is something that is critical that you must understand. The factors you consider before saying yes to the audit assignment that has been given. Then the second thing is, okay, who qualifies to be an auditor? So qualification of an auditor. The person shouldn't be an employee of the organization, shouldn't be a shareholder of the company. The person must not be an agent of the organization, must not be an employee of the company. So for instance, the board chairman's audit firm cannot audit the company. It's not possible. You cannot do that in relation to that. So the person must have written and qualified some regulatory examination like the ACCA UK or the ICAG Ghana. The person must be in a good standing member or a good standing member of the regulatory body in question in relation to that. So all of these things will have to be looked at when we are looking at the qualification of the auditor. Then what do we ask? The next thing we ask ourselves is, okay, when we now appoint the auditor, what are the responsibilities of the auditor? What roles does the auditor play? Traditionally, we classify the responsibility of the roles of the auditor into two. We have what is called the primary responsibility and then secondary responsibility. Now, primarily, the auditor is employed to do what? To independently examine the financial statement and issue an auditor's report at the end of the audit. That is the role of the auditor. That is his fundamental responsibility. We want him to independently examine the financial statement and then issue an auditor's report. So that is a fundamental role. That is a fundamental responsibility of the auditor. But aside that, there are also other secondary roles or the secondary functions that the auditor plays. One of them is that one of them is that the auditor must design the audit in such a way that he will be able to identify fraud, errors, and material misstatements if they exist in the internal controls as well as in the financial statement of the organization. Now, note that the responsibility of identification, prevention, and detection of fraud is the fundamental responsibility of the management of the organization. So the management of the organization is responsible for the detection, correction, and prevention of fraud and error. The auditor is just there to design his audit in such a way that he will be able to identify these fraud and errors should they exist. Another secondary responsibility of the auditor is that usually as he undertakes the audit or at the end of the audit, he is required to communicate to management and those charged with governance with what is called deficiencies in internal controls or significant weaknesses in the internal controls to the management and those charged with governance, and also make a recommendation. So if we come to the company and we realize that, all right, internal controls are not working effectively and efficiently, we can, that will be part of our communicate to the management, to those charged with the governance, but we don't just identify the weaknesses that are in the internal controls. We also have to what? Make various recommendations to the client entity as to what is supposed to do in relation to that. So these are a couple of things that we can also talk about in relation to the roles of the auditor in that case. Then the final thing about that is the issue about the rights of the auditor. What are the rights of the auditor? When the auditor is employed, when the auditor is appointed and he starts his audit work, he has a lot of rights. Number one, he has rights to have, or he has rights to have access to the books, notes, and accounts of the financial statement. He has every right. So as far as we are auditing, whatever invoice, whatever document, whatever management minutes, everything, internal reports, board of directors reports, whatever documents there is that he needs, he has every right to get access to it. Number two, the auditor also has a right to be answered any query that he raises or makes in relation to that. So if I'm the auditor of the company and one of the key roles or one of the key qualification of an auditor in order to undertake the audit work in a professional competence and due care is to undertake the audit with an attitude of what is called professional skepticism. Professional skepticism means that being alert on audit evidence and having a questioning mind. Okay, so you as an auditor, you don't go to the company and say, oh, because the board chairman has a PhD in accountancy and corporate governance, the CEO has an MBA, an FFA, a QQC, a BBC, and whatever C in a certain field, so everything is okay. No, you must go in with a questioning mind, and you must be alert for any inconsistency. And if you identify any of those things and you raise queries about it, it is the right of the auditor that those queries will be answered in relation to that. It is also the right of the auditor to demand his audit fee or to be paid his audit fee at the end of the audit. Certainly, it's fundamental. So he has every right to receive that money that is due him once he has undertaken his audit. Also, the auditor has a right to speak at the annual general meeting. So anytime, as far as we are the auditors of the company, if there is an annual general meeting or an extraordinary meeting, the auditor has a right to speak with the shareholders, because remember, it is the shareholders who appointed the auditor to be able to undertake the audit in that case. So that is what we can talk about in relation to appointment of the auditor. That is the factors we need to consider, the roles, responsibility, the rights of the auditor, and the qualification of the auditor. So YouTube, if you're watching on YouTube, give us a thumbs up on the video. But most importantly, I want you to comment in the chat box with all of your questions. And then if you want to join the live stream here on Zoom as well, you can pick the meeting ID in the chat box and you can join the stream Yeah. Then for those of you who are live with me on Zoom here, if you have any questions, you know what to do. You click on the more button on your screen. You will see raise your hand. Then I will get an indication that you raised your hand. Then I'll call you in for you to ask your questions. This is a Q&A session, all right? So I want you guys to open up whatever things you don't understand or you want more lights to be thrown on. Don't be shy. You can come up with it. And then even if you're on Zoom and you don't want to talk, you can still chat. Go to the chat box and then put your questions in the chat box. I will be reading the question on the Zoom group chat as well, so that I'll be able to answer all of your questions for you. So maybe you don't want to speak, but you can type it in the Zoom chat box and I'll be able to read that as well in relation to that. So that is the issue about the appointment of the auditor. Now, aside this, especially for level 2 students, you must also understand the issue in relation to removal and resignation of the auditor. Now, if the auditor is removed, he must write or issue a statement of circumstance detailing out the possible reasons why he might be removed. And that letter of circumstance must be given to the Registrar General, must be given to other regulatory bodies as well, must be given to the company, and all shareholders must receive minutes on those things. And if there are some times where extraordinary meetings will have to be called on why the auditor is supposed to be changed, or if the auditor resigns, he must also issue a statement of circumstance detailing out the reasons why he is resigning, because there are various reasons why an auditor may be removed. Maybe the entity size is much bigger now than the auditor's capacity, or maybe the auditor is doing something that management think they don't qualify as well as possible, or they don't possess the skill well, or maybe the auditor thinks that their independence is impaired because of continuous relationship with the client entity, so they may resign. So there are various reasons. I may not go into details of those things, but it's also something that you need to take note of in that case. Give me a moment. Let me plug up my device here. Okay. Right. Okay, so I guess we're good now. Okay, so I see other people joining on the Zoom call here. All right. So let's continue. So these are the things you have to understand when it comes to, now, like I said, these are fundamental issues, okay? So whether you're doing audit and assurance level 2, advanced audit and assurance level 3, these are fundamental issues in relation to that. So you make sure that you take note of. For those of you on the Zoom call with me, remember that we are streaming on YouTube. So in case you have a background you don't want it to show, you can just turn off your camera. And then if you have any question, you can just comment below with your questions in relation to that. So you can raise your hand. You can click on the raise your hand button on Zoom, and then I will call you in to ask your questions, or you can put your questions in the chat box on the Zoom group chat, and then I'll be able to get your questions, read it out, and then answer your questions for you. Then for those of you who are on YouTube with me, you can also put your questions in the chat box. We are looking at audit and assurance and advanced audit and assurance in relation to that. Okay, so that's the first fundamental thing you have to understand, appointment of the auditor. So after the auditor is appointed, you have undertaken all the background issues, you've assessed your independence, you've considered the capacity, you've understood the company, you realize that, okay, this company is best fit for you, you can audit the company and there will not be any issue. You've spoken to the outgoing auditor and everything is okay. And if sometimes it will be a first-time audit of the client entity, so there may not be any outgoing auditor. But let's say we've assessed everything and everything is okay. What then do we do? After we assess all of that, what then do we do? We then come to the second aspect, and that is going to be audit planning. Now, this is a very critical area, whether I like it or not. There's a question on that waiting for you, both level 2 and level 3. So the second thing that you have to look out for is audit planning. So second, audit planning. Sometimes we put it as audit planning and risk assessment, audit planning and risk assessment. Now, like I said, this is the critical aspect of the audit and assurance syllabus, whether you're doing level 2 or level 3. I see a question from Miles on our Zoom group. So let me read that out. So Miles said, please, is there a consideration whether the auditor is related before engagement? Example, the auditor being a close family member. Yes, you have to consider that. Definitely, you cannot audit your wife's company. You cannot audit your, so both business, close in business relationship, and also close in family relationship. So we have to consider that. It means, what it means is that if there is a close relationship, your independence will be impaired and your objectivity will be affected as an auditor, because that will affect the kind of judgments you make in relation to the audit evidence that you come into contact with. So certainly you have to consider that. So once the person is not just a close family member, but if the person is a family member and you find it smelling a lot, you just have to decline the audit. But sometimes we will remove the person. So let's say we had planned that for company A, I will be part of the audit. Okay, so that is our plan. We've planned that I'll be part of the audit. And then all of a sudden, we realize that my in-law is the board chairman of that company. Then certainly the audit firm, if they can get another person to replace what I'm going to be doing on the assignment, then they will take me off that assignment in relation to that. Now, these are based on judgments, or we may decline the audit. Other times, I could be allowed to be on the audit team, but whatever I do, it has to be reviewed by another person to ensure that I made the right judgment in relation to that. So some of those things are judgmental and they are based on the understanding that the audit firm has, but it's a factor that we consider in relation to that. So Miles, I believe you understand. Then I see someone raising the hand, Simon Adokanlo. If I mention your name wrong, forgive me. Okay, Miles said, yes, please, thank you, you are welcome. For those of you watching on YouTube, comment below in the chat box with your questions. Simon Adokanlo on Zoom, you can come in with your question, so you can unmute your mic and then you can ask your question, because I see you raise your hand. Okay, so maybe he is not ready, so let's move ahead. So the second key aspect of the syllabus that we need to understand, whether you are doing audit and assurance level 2, advanced audit and assurance, is what? Audit planning. Audit planning. So now we've been appointed, we've done the various assessments, and we think we have the capacity. We think we know the client entity. We think we understand their internal controls. Their management, we understand them very well. So what do we do now? We now plan the audit. So we come to audit planning. You see, you cannot do anything without planning, because, so this is the crucial aspect of the audit. Now, usually audit planning is divided into two broad stages. We have what is called the audit strategy, and then the audit plan itself. So there are two key things you have to understand: the audit strategy and then the audit plan itself. Now, the audit plan has to do with a detailed procedure on how the audit will be carried out. So the audit plan tells us the detailed procedure on the stages and how we carry out the audits. Maybe day one, we are going to look at trade receivables, trade payables, like that kind of thing. That is the audit plan. The audit strategy tells us the approach that the auditor is going to be using during the audit. Now, in order for us to really design an audit strategy or understand an audit strategy, there are a couple of things that we must look out for when we are dealing with the audit planning. The first thing is that we must understand the issue in relation to the timing. Timing here means the time that we're going to be starting the audit, the time that we're going to be ending the audit, and the time that we're going to be visiting the client entity. Because the fact that you are an auditor does not mean you can get up from your office and come to the company anytime you like. No. Before any visit, you must inform the management, those who charge with governance, that today I'm coming to meet the accounts department. Today I'm going to meet, so they prepare, so that you don't also interfere with the day-to-day running of the organization. So one aspect of audit strategy is timing of the audit. That is very, very important. When do we start the audit? When do we end the audit? And when do we visit the audit, the client entity in relation to that? Then the next thing has to do with the scope of the audit. I love this one, very important. The scope of the audit discusses or tries to answer the question, how much work is there to be done? Okay, that is the scope of the audit. So how much work are we going to be doing under this audit? Remember, if it is an audit that is undertaking and the client entity is big and it has branches maybe across the country locally, then the work or the scope of the audit will be different, from a company that has only one branch or has only one office in relation to that. So we must look at the issue in relation to the scope of the audit, because that is very critical and that is very, very important. I see a comment from Simona Dongo. Let me answer that real quick. So Simon said, please, can the audit engagement still be valid if the auditor finds it in the middle of the work that the client you are working with has a relationship with you? Okay, so Simon, in the middle of the audit, now, yes, you can still go ahead, but what it means then is that you did not plan your audit very well. What it means is that you did not understand the client entity very well. So that is quality control, which is something I'll be talking about, another key area of the audit. But assuming in the middle before you realize, what it means is that, like I said, either the individual will be taken off the audit and another person will be replaced, or whatever work that individual undertakes will be reviewed by another person who is a senior to assess the judgments, the various assumptions and conclusions that he arrives at. So in the middle of the audit, two options as always: either the person will be taken off the audit and whatever work he has done so far will be reviewed by somebody else, or he will continue to do the audit and then the work he will do will be supervised and will be reviewed by the engagement partner before we come to the conclusion. So Simon, that is what we do in relation to that. I believe that's clear for you. YouTube, for those of you watching on YouTube, comment in the chat box with all of your questions. In case you want to join the Zoom call, to the details are in the chat box, and give me a thumbs up on the video, man. And if you have not subscribed to the channel, come on now, what are you waiting for? Subscribe to the channel and then let's together grow and reach a lot of people. So when it comes to audit strategy, timing. Second thing, scope of the audit. Third thing has to do with one of my favorite as well here, the direction of the audit. the direction of the audit. Now, I want you to make sure you follow me carefully here in relation to that. Galaxy A2 core, you showed a thumbs up. Are you trying to ask question? If you have a question, Galaxy A2 core, you can unmute your mic and talk. Galaxy A2 core. I saw a thumbs up. I don't know if you were clicking. Yeah, come.
Oh, please. No, please.
Okay, okay. Okay, so the third thing about the audit strategy, which is one of the critical aspects of the audit planning, is the direction of the audit. Now, the direction of the audit talks about how the audit is going to be carried out in general and how we're going to be designing all of that. Now, the direction of the audit depends on a couple of issues. Number one, the direction of the audit depends on our understanding of the client entity. Maybe let me clean these guys up so I have a bigger board. So remember, we've spoken about three things so far. Timing, or two things so far: timing, scope, and the third one I'm talking about is direction. I need a bigger screen, so let me put it here. So the direction of the audit. Now, so the direction of the audit is based on, number one, like I told you, the understanding of the client entity. Based on the understanding you have on the client entity, then the risks of material misstatement, very, very important. That is the riskiness of the audit that you are undertaking. We'll come to that in a moment. And then also the third thing has to, so I'll come to the third thing in a moment. So I save some space then down there. So number one, understanding of the client entity. You cannot go into the audit, you cannot plan your audit without understanding the client entity. So when we say understanding the client entity, what are the things you are supposed to understand from the client entity? Among other things, you must understand the business of the organization. So what the nature of their business, very, very important. So nature of business and the industry that they are in. It's very, very critical for you to understand the nature of the business and the industry that the entity is in. So if it is a banking, what is the nature? If it is a loan investment company, if it is an educational institute, what do they do? You must understand the nature of the organization. Not only that, you must also understand the internal controls of the organization. This is very, very critical. The internal controls tells us how the systems, the procedures designed and implemented by the management of the organization that guides how the day-to-day aspect of the organization is run, as well as how financial statements are prepared. Because remember, the financial statement that we are going to be examining, we are going to be auditing, were prepared from the internal controls. So we as auditors, we must understand the internal controls very, very well in relation to that. So the nature of the business, we must understand the internal controls. We must also understand the issue about the competitiveness in the industry. Now, somebody may ask me, Nhyira, I'm an auditor. Why do I have to understand the competitiveness of the industry? This is very, very critical because if the competition or if the entity is in a highly competitive market or a highly competitive geographical area, then the entity may not be selling as much as possible because of the competition. For that reason, the entity may be misappropriating a couple of things, maybe overstating the revenue so they make more profit, or understating cost, then they make profit. So we must understand the competitive environment. Is the company a market leader, or they are lagging behind? So we must understand the competitiveness that exists within the industry, because that will help us to form an understanding of what is likely to happen in the organization. Because remember, it depends on the understanding of the client entity that you will be able to assess the risks of material misstatement. That is ISA 315. Assessing the risks of material misstatement by understanding the client entity, ISA 315. So the risks of material misstatement simply means what could go wrong. In a simple language, risks of material misstatement simply means what could go wrong. That's a simple language of risks of material misstatement. What could go wrong? So, like I said, if they're in a highly competitive environment, like I said, they could increase their revenue. They could reduce their cost. They may decide to use creative accounting. They may not depreciate the assets. Why? Because they want to appear as competitive. Now, like I'm using this as an example, but it doesn't mean it's true. You see, one of the telecommunication companies that I see in Ghana always really boasting about its profitability is MTN Ghana PLC. All right. Now, I'm just saying this generically in relation to that. Even in this COVID-19, I think somewhere around ending of last month, they reported that they have made a profit of X amount. So if the MTN is a market leader, and let's say we are auditing a company like Busy Internet, and MTN is declaring this kind of profit, shareholders or management of Busy Internet would also say, we have also increased profit. Okay, by how much? So we must understand the competitiveness. So because if MTN and is a competitor, and then we are auditing Busy Internet or Selfline, then we must understand what is happening there in relation to that. So because the way MTN is publishing its profitability, Busy Internet, Selfline will also want to what? Publish. So that everybody will know that, oh, we are doing well in relation to that. So we must understand the competitiveness of the industry that the company is in, so we can assess the risks of material misstatement. So number one, the nature of the business. Number two, the internal controls of the organization. Number three, the competitiveness of the organization. Number four, we also have to look at some strategy failures of the organization during the year under consideration. Now, somebody may ask, why should we be interested in this as auditors? This is very critical because if, for instance, during the year, the entity launched a product and the product failed, that means the company is going to be incurring a lot of costs. That means the company is going to be losing a lot of money. So if we don't assess the failure level, now remember, if the product fails, the company will still declare a lot of profit. The company will still say they've generated a lot of revenue, but hey, your product failed. You launched a product and it did not do well. So we must understand whatever strategic failure that they have had within the year, because the strategic failure could also affect the risks of material misstatement about what could go wrong. Because like if they launch a product and the product failed, they incurred a lot of cost, or maybe they did not adhere to FDA, Food and Drug Authority, or Ghana Standard Authority regulatory requirements, and they paid a lot of penalties. That could also affect the financial statement. The entity may decide not to include that in the financial statement or incorporate that in the financial statement. And again, that could affect the profitability of the organization in relation to that. So we must understand strategic failure of the organization. Then the last thing that we must understand is the issue in relation to strategic objective of the organization. Okay, and then the management, the strategic objective of the organization and the management. What does the company want to achieve going into the future? Who are the management of the organization? Have they suffered anything in the past? Do they have any history of fraud? That kind of things. We must understand all of these, because you see, the objective of the organization, what the organization wants to achieve in the future, can affect the way it prepares its financial statements right now. Remember, I told you in the beginning that we as auditors, we are coming on with a professional skepticism attitude, meaning that we are alert for all evidence that will come to us, and we also have a questioning mind. So you don't just see something and you say, oh, if Enoko, it's good, it's good. Dabi, you don't do that. You must open up, you must ask questions in relation to that. So when it comes to the direction of the audit, we must understand the client entity in relation to all of these things in that case. Now, chances are you may do part of these even before you accept the audit. The reason is that if you receive the letter from the client entity and you realize that the nature of their business, the way their internal controls are structured, and the kind of failures that they have had, it is risky to audit such a firm, then you may turn down the appointment. So understanding the client entity starts even before we accept the audit, then we carry it out further after we have accepted the audit in relation to that. So once we understand, now any questions, please, any questions? Remember, there's a Q&A session. You guys are making me to teach. When I was supposed to do Q&A session. So for those of you who are on Zoom call, if you have any questions, you know what to do. You can put it in the Zoom chat and I'll be reading it. Or you can raise your hand using the raise your hand button on your screen and I'll call you in to ask your questions. Then for those of you who are watching on YouTube also, you can comment in the chat box with all of your questions. I'll be reading them as well to and answer them. And then if you are watching on YouTube and you've not given us a thumbs up on the video, please do give us a thumbs up on the video. And that way YouTube, the video will be more engaging and YouTube will be able to push it to other people to watch so we can together reach a lot of people as possible and grow the channel together in relation to that. So that is understanding the client entity. So once we understand the client entity, we come to the RMM, the risks of material misstatement. Like I said, what could go wrong? Okay, so the risks of material misstatement, like I said, what could go wrong in the financial statement? If we look at the company under consideration, what could go wrong? That is the risks of material misstatement. Now, at the planning stage of the audit, the auditor is going to be undertaking analytical procedures. Don't worry, I'll be taking you through, I'll be mentioning that later on. But the auditor will use analytical procedures in order to assess the risks of material misstatement of the client entity. And then at that stage, based on the assessment of the risks, the auditor will be able to identify the risk in the audit. Then the auditor will make a decision on how they can respond to the audit in relation to that. Then from that assessment of the audit, the auditor will set what is called the preliminary materiality level, and then what is called the performance materiality level. The preliminary materiality level is the materiality level that is set at the planning stage of the audit, whilst the performance materiality level is the materiality level set when the work actually begins in relation to that. I may not go through the calculations, but we can set the materiality level based on the statement of financial performance, based on the statement of financial position, using the sales to the net assets and all of those things in relation to that. So that is basically what we must also understand about the direction of the audit. So when it comes to planning of the audit, these are a couple of things. There are other things though, but I'm just touching on some of the things. This is just a surface of audit planning in relation to that. So these are some of the things we must understand, but audit planning is a very critical area in the audit. So number one, what did we say? You understand the appointment of the audit. Number two, we said you must understand the issue about planning of the audit. Then under planning, we said you must look at the audit strategy and the audit plan. Then under the audit strategy, we said you must look at timing, you must look at the scope of the audit, how much work is involved, and then certainly you must look at the direction of the audit, and that is what led me into all these. Okay. So the next thing about key areas that you have to focus on, aside appointment, audit planning. So after we plan the audit, what do? We now go to the client entity and go and do the audit work. Okay. So when we now start the client's work, or we now go to the client entity and go to the field to actually do the work, there are two things that you got to understand. This is where we talk about audit procedure and audit evidence. And whether you like it or not, there is a question waiting for you on this area: audit procedures and audit evidence. Very, very hot areas, and we're going to be talking about them in a moment. Now, you see, generally, when it comes to audits, there is a way I represent all of these things in a simple way, that as an auditor, you must have a general tip. Let me take you through this before I continue. Then you must take a field pick. Then you must then report all clean and dirty elements. These are the three levels of auditing that you gotta understand. There is a general tip, you take a field pick, then you report all clean and dirty elements. What does that mean? General tip simply means that before you start as an auditor, T here means training. So you should have been trained in the field of auditing, in the field of accounting. So as an auditor, you must understand various things about what? Auditing. You must understand the ISAs, the IASs, the IFRSs, the Intosia rules. You must understand all of these things. You must understand the tax laws, the principles, the policies. So you must be trained before you can be an auditor. That is the T. Then the I here is independence. In order to enhance your audit work and to be able to be more objective in the audit and carry out a quality audit, the auditor must be what? Independent. And I've spoken about independence already. But when it comes to independence, there are two things you got to understand. We have what we call independence in fact and independence in appearance. Independence in fact is simply the real state of mind of the auditor, which simply means that the auditor cannot be a shareholder, the auditor cannot be an employee, or the auditor should not have any financial interest in the company. That is independence in fact, the real state of mind of the auditor. Then the second aspect of the independence, the issue about independence, is independence in appearance. This simply means that the auditor is not supposed to have any close personal or business relationship with the client entity. So you should not have any close personal or business relationship. Like I said, you cannot audit your mother-in-law's company. You cannot audit your wife's company. You cannot audit like that kind of thing. Your friend who you are very close with, you cannot audit that in relation to that. That is independence in fact. So when it comes to independence, very, very critical. So before you even start the audit, you must be trained. You must be qualified. Not only that, you should be somebody who is independent in fact and independent in appearance. Then the P has to do with the issue in relation to professional proficiency or professional competence and due care. So which means that you must be somebody who is going to be carrying out what? A quality control audit. You must be somebody who is on the top notch to carry out the work in relation to the way it is expected to be carried out. Because you see, that is due care. Due care means that when I give you a job to do, you carry out the work based on the generally accepted standard that the work has to be carried out in relation to that. So this is what we call the general tip. Inti ansana obeshe audit na no, you've got to be trained, you've got to be independent, and you've got to be somebody who is proficient, who is effective. I have a question from YouTube. Let me look at that in the chat box real quick. Miriam Kachele said, please explain the difference between planning materiality and performance materiality. Okay, I mentioned this a moment ago. This is what I said. You see, at the planning stage of the audit, based on the understanding we have on the audit, the auditor will set a materiality level, right? And that is what is called the preliminary materiality level. So usually that materiality level is quite high in relation to that. But when the auditor now begins to do the audit work, he will set another materiality level, and that will be called the performance materiality level. So this is the difference. The difference is that The planning materiality level or the preliminary materiality level is the level of materiality we set based on the understanding we had when we were planning the audit. So maybe we identified that internal control systems are not working well. We identified that, okay, their purchasing cycle is not working well. Maybe we realized that recently their accountant left, and so they employed a new accountant. So there could be issue in relation to their financial statements. So when we are understanding the client entity, we will set a certain materiality level, and that will be high. Now, when we begin to now undertake the audit, we will set another materiality level, and that is a performance materiality level, and that will be lower than the preliminary materiality level. So anything that falls within that range will be considered as material, and further audit procedure would have to be undertaken in order to come to a conclusion in relation to that. So Miriam, that is what you must understand about that. Let me know if it is clear for you in relation to that. So if you have questions, please put them in the chat box. Those of you who are on YouTube and those of you on the Zoom call with me here, you can raise your hand by clicking on the raise your hand button, or you can put it in the chat box, and I'm going to be reading that as well and answer your questions for you. So general tip, you got to be trained, you got to be independent, you got to be proficient, professional, competent, and do okay. Then you now take a field pick. So you are trained, you know you are independent, you know you are somebody who can undertake the audit. You now go and take a field pick. Now, what does it mean to take a field pick? To take a field pick simply means that you now go and carry out the audit. You now go and carry out the audit. So when you are carrying out the audit, the P there simply means planning. So when you now go to plan the audit, when you now go to undertake the audit, that is taking a field pick, you need to what? Plan the audit. And I've spoken to you about planning there in relation to that. Then as you are undertaking the audit, you have to also understand the internal control systems of the organization. And that is the I there. You must make sure you understand the internal control systems in relation to that. And then as you are undertaking the audit, the C there means that the auditor must gather what is called corroborative audit evidence. Corroborative audit evidence. Because you see, at the end of the day, you need an evidence in order to issue your auditor's report. So as you are planning the audit, as you are assessing the internal controls, you must gather corroborative audit evidence. And I'm going to be going through that with you in a moment. So general tip, you take a field pick, and then you report all clean and dirty elements. Now, these are actually representing something. So they are not just jargons we put up, okay? So you report all clean, dirty elements. All, the word A there simply means that you must report on the accounting policy of the organization. So you must report on the accounting policies of the organization. This is very, very important and must be stated explicitly on the face of the auditor's report, that financial statement prepared represents a true and fair view of the entity in accordance with legal regulatory framework, international financial reporting standard, all of that. So you must report on all the A there simply means what? The accounting policies, and that must be stated explicitly on the face of the auditor's report. Clean, that is the C here, means consistency of the application of the accounting policies. The auditor must also report on the consistency of the application of the accounting policies. Why is that important? Because consistency enhances comparison of the financial statement. So if last year the entity used a different accounting policy, this year it is using a different accounting policy, then there will be difficulties in the comparison of the financial statements. So we must report also on the consistency of the accounting policy. But this is the good news. This will be implicit in the auditor's report. It means you don't state it directly in the auditor's report, but it should be inferred when someone reads the report that there's consistency in the application of the accounting policy. So report all, accounting policy, clean, consistency of accounting policy. Dirty here means disclosure. The D here means disclosure. So you must report on whether the entity has actually disclosed everything they are supposed to be disclosing in the financial statement. Remember, it is the core responsibility of management to prepare and present the financial statement. It is not the auditor's responsibility. And under no circumstance should or must the auditor be involved in the preparation and presentation of the financial statement. Because if the auditor does, that will result into what is called the self-review risk, and that will accept the objectivity of the auditor. So we must report on the disclosure, making sure that everything has been disclosed in relation to that. So reports all accounting policy, clean consistency of the accounting policy, D, and that is going to be dirty, dirty, and that is the disclosure. And then the E has to do with the opinion that we are going to be expressing based on the evidence that we have on the auditor's report in relation to that. So is it a qualified opinion, unqualified opinion? These together are what is referred to as the generally accepted auditing standards, GAS, the generally accepted auditing standard. So you take a general tip, you take a field pick, then you report all clean and dirty elements. And if you check, there are 10 generally accepted auditing standards. And these 10 things are the bedrock on which the entire syllabus of audit and assurance and advanced audit and assurance is built. I should have spoken about this in the beginning, but I think it just fits into it in that case. I see some comments on YouTube. Let me go through them quickly. Augustine A. Boatin said, good luck everyone preparing for the audit and assurance paper. Okay, thank you for your best wishes. Then Miriam said, thank you very much for the explanation. Okay, you are welcome, Miriam. Right. So key areas, still on key areas, we're talking about number one, appointment of the auditor. Number two, planning of the audit. And we've spoken about planning of the audit. Then the third thing that you must understand is my favorite area when it comes to audit and assurance. You see, I have a favorite area for all the subjects, but when it comes to audit and assurance, also my favorite area is the third thing I'm about to take you through, and that is going to be audit procedure and audit evidence. I love this area, audit procedure and audit evidence. Audit procedure. Maybe we can talk about audit procedure first, then we'll talk about audit evidence next. So audit procedure. This is very, very critical. Whether you like it or not, there is a question waiting for you in the exam hall. Whether you are doing advanced audit, you are doing audit and assurance level 2, there is a question waiting for you on audit procedure. Now, what does it mean here? It means that the auditor or the examiner can ask you to write an audit procedure for auditing inventories, for auditing tangible assets, for auditing tax, for auditing trade receivables, for auditing trade payables. This is where the issue about audit procedure comes to being. And many students fail the audit paper because of this area. And I want you to make sure you understand this very, very well, because many students fail the audit paper because of this area. That's why it's my favorite. That's why I said it's my favorite area, because it's technical. And if you don't understand it well, you will be actually finding yourself wanting there. I may not go deeper into it because it's not something that I'm teaching, but I'll just glimpse the surface for you, then you get the idea. Now, when it comes to the audit procedure, we are talking about A, E, I, O, U. That is the 5 vowel sounds. A, E, I, O, U, the 5 vowel sounds. The first one is analytical procedures. Remember I told you about analytical procedure at the planning stage of the audit. Note that analytical procedure is actually undertaken throughout the audit, at the planning stage of the audit, during the audit, and even at the end of the audit, analytical procedures are undertaken. Now, what is analytical procedure? Analytical procedure simply involves the comparison of the financial statement with previous year financial statement or the budget of the organization in order to identify the trends in the financial statement and the changes. Now, what does that mean? So let's say that we go to the organization. Now, please note that on the face of the financial statement, every figure on the face of a financial statement is actually an assertion that is made by the management. It's actually a statement that the management is making. So listen to this carefully. Last year, we saw that their revenue was, say, $20.1 million. Then this year, their revenue is $42.5 million. TNU. But in their budget, we saw that they budgeted that their revenue should be $26.2 million. Now, listen to this carefully so that you understand what I'm saying. This is what we mean by analytical procedures. Now, last year, the company had a revenue. So let me write it there, not revenue, revenue. The company had a revenue of $20.1 million. Then they budgeted that in the current year under consideration, they will have a revenue of $26.2 million. To our surprise as auditors, when we are looking at the financial statement, we realized that their actual revenue was $42.5 million. Doesn't this raise an eyebrow? Like, what the heck is going on here? You budgeted that you will get a revenue of 26.2 million, but the entity is actually recording a revenue of 42.5 million. So this is analytical procedures. So you'll be able to identify the trend about why is this happening? Could it be that the entity is overstating the revenue? Or could it be that there is something that happened? Because who makes a budget of 26.2 but end up getting 42.5? Something could be smelling. And that is what we mean by analytical procedures. That is why we do this, then we can identify the risk. So immediately we see this as auditors, we know that there may be a risk of either the sales cycle of the organization not working well, or there is a mistake in the accounting systems about recognition and recording of what? Revenues. Because it could be an error, it could be a fraud, or it could be some misstatement that the organization is making. That is what we mean by analytical procedures. Now, like I said, I won't dive deeper into some of these things because I'm just cleaning the surface, but I want to make sure that you understand the concept very well. So after we undertake analytical procedures, we have an idea of what is happening in terms of the changes in the figures, the changes in everything. We go to the next one, and that is E, and the E there is going to be inquiry. Inquiry. So this is where we inquire from management. So from the analytical procedures, we now inquire from management. Hey, why did the sales increase like that? Then maybe management to tell us that, oh, we won a government contract. Because of the coronavirus, we won a government contract to provide PPEs. That is why our sales increase like that. Or we are a construction firm, and because now many foreign companies cannot come to Ghana to come and construct business roads, you know, the government is now giving all the deals to the local contractors. So maybe that is why our sales increase. But you as an auditor, you don't take that on the face value. You don't take that on the face value. So inquiry can come in relation to inquiring from the management of the organization, and inquiry can also be confirmation from what? Third parties. This is where we talk about trade receivables, trade payables in relation to that. I see a comment in the group chat. Let me go there real quick. Mao said, please, so in the analytical procedures, basically about calculating ratios and identifying trend, or there's actually more to it? No, usually it's about the ratios and getting the trend. That is usually what we do under the analytical procedures. So Miles, that is basically the thing about that. We just want to look at the ratios and then the trend so we can make various decisions in relation to that. So inquiry, we inquire from management why what something is happening, and also we speak to the third parties on something. Then we come to the next one, and that is called I, and the I there is what? Inspection. Inspection. We need to inspect certain documents. For instance, if the company said it, or the company says it has bought some assets during the year, we need to inspect to see how much the asset was bought for. If the company says it has acquired an asset, we need to find out, did they buy it or they lease the asset? Okay, whom did they lease the asset from? Maybe they lease the asset from the board of director. Maybe it is the board chairman's office and he has leased it to the company. And that will be a related party transaction, IAS 24, and we have to find out how the treatment will be done. So as auditors, we must inspect all documents, we must inspect all title deeds to find out whether even the asset belongs to the company. This is where inventory counts and all of those things, and inspection, trade receive inventory, the store ledger card with physical counting of inventory, all of these things are there in relation to that. So inspection is a very key procedure that we undertake in that case. Or is observation. You're going to look at and see how processes are being undertaken in relation to that. Attending of inventory counts is an observation. Then, like you go to the company and the company says that, oh, in our company, when it comes to sales, credit sales, when a customer places an order, somebody approves the order and the order is sent to this, the order is sent to that. So you as an auditor, you must also sit down and find out whether it is true. So sometimes the auditor will put a dummy transaction into the system to find out whether it will actually go through all the stages when we are assessing what the efficiency and effectiveness of the system of the organization. So observation is very, very critical. And then the last one is recalculation and reperformance. This is where we try to recalculate all the figures on the face of the financial statement. So the depreciation calculation, did they do it well? The tax, deferred tax computation, did they do it well? That is recalculation and reperformance. So these are the 5 audit procedures that you undertake. Please note, it depends on what the auditor asks you and the ones you're going to be using. So it depends on the question, but there are sometimes you may need only inquiry and inspection. There are sometimes you may need analytical procedures, inquiry, and then recalculation. So it is not all questions that you will be using all the audit procedures. And I want you to make sure you understand this very, very well. Remember I told you this is one of the reasons why students fail the audit examination. So make sure you understand when to apply what. Now, when carrying out audit procedures, you are carrying out the audit procedures to test for various assertions in the financial statement. Now, if you're a good student of audit, you know there are various assertions that must be tested, and the kind of assertions that are tested, normally we mimic it as the ACCA cover. I believe every one of you have heard this. The ACCA cover. This is the number of assertions that we are going to be testing for: allocation, completeness, accuracy, occurrence, valuation, existence, right and obligation. All of these are some of the things that we need to understand. This C is what? So we have accuracy. This is accuracy. This is allocation. This is occurrence. This is valuation. This is existence. This is right and obligation. Then the other 2 C's are completeness, classification, yes, and then the other C, I forgot it, but I guess you guys remember this. So these are the assertions. And the assertions are also classified into three. Number one, when we are dealing with the balances in the income statement, when you're dealing with the balances in the income statement, when you're dealing with the closing balances in the statement of financial position, or when you're dealing with the disclosure of the things. So if you are looking at something like assets, when the examiner says, write an audit procedure on the fixed assets, then yes, Miles said, Nhyira, please, is it cut off? Yes, cut off is one of the C's here. Cut off, very, very important. It's very, very important. Cut off has to do with, so Miles, thank you very much. Cut off has to do with whether next year transactions are actually included in the current year transaction. So what year or where is the cutoff? So if the year ended is 30th November, then transactions after 30th November should not be included in the current year. So yes, cutoff is there in relation to that. So like I was saying, if you are auditing the assets, then tangible assets, then what will you be looking at? If you are auditing tangible assets, the best assertions that you could be testing for is number one, right and obligation, whether the assets actually belong to the company. So you must inspect the title deed. You must find out whether the company has outrightly bought the assets or leased the assets. So right and obligation, very, very important. Then E is another aspect, that is existence. Is it there? So on the face of the financial statement and in their books, they said they have 10 cars valued at $20,000. Okay, are the 10 cars there? Like, can you count them? That is existence. Then the issue about VIN, valuation. What value have they placed on the asset? And is the value accurate? That is why as part of the audit team, there will be a valuer who is going to be valuing properties of the business. So when you come, the company has made a couple of valuations, but you as an auditor or part of the audit team, you must also have somebody who will place value on the company. So depending on the question the examiner asks, you will look at the assertions that are being tested for, and based on the assertions that are being tested for, then you are going to be looking at what? The audit procedures to use. So you got to make sure you understand the linkage between the assertions and the audit procedures. And it depends on what the examiner is asking you, then you can do what you have to do. Like I said, we are just gleaning the surface here because there's a Q&A session, and I'm just glancing through some of the things for you there. All right. So we look at appointment of the auditor. We've looked at audit planning. We've looked at audit procedure. Now, as you are carrying out the audit procedure, you come to the fourth thing, my favorite area as well, and that is called audit evidence. Audit evidence. Now, before I go to audit evidence, let me make a statement clearly here. When writing audit procedures, you have to be careful. I need to say this to you guys. When writing audit procedures, there are three things that must be contained in the audit procedure. Number one, you must state the assertion that is being tested. You must state the audit procedure that you are using. And you must tell us the reason for that procedure. So these three things must be there when writing an audit procedure. So what assertion are you testing? Is it valuation? Is it right and obligation? Is it existence? Is it cutoff? What assertion are you testing? Okay, what procedure are you using? Is it analytical procedures? Is it inquiry? Is it observation? Why are you undertaking that kind of procedure? So these three things must be in each audit procedure you write out. And I believe that you know this very well. I believe you know this very well. So that's what you need to understand there. So YouTube, for those of you watching on YouTube, if you have any questions, please put it in the chat box. I'll be very much excited to answer all of your questions for you. And then those of you watching here on or with me here on Zoom, you can raise your hand, or yes, you can raise your hand and I'll call you in to speak. Or you can also put a question on the Zoom chat, and then I will read it out and also answer your questions for you in relation to that. So YouTube, comment below in the chat box with your questions, and give us a thumbs up on the video. For those of you watching on YouTube, give us a thumbs up on the video. That way it gets more engagement, and we get YouTube is able to push it to a lot of people to get. So the fourth area, or the next thing, is the audit evidence. Very, very important. Remember, the auditor at the end of the audit would have to issue an auditor's report, isn't it? But how do you issue an auditor's report? You issue an auditor's report based on what? The evidence that has been gathered. So the standard states that the auditor must, that is ISA 500. I wanted to just make sure I bring that out. ISA 500, that's audit evidence. State that is International Standards on Audit 500 states that the auditor must gather sufficient, appropriate audit evidence. So let's get a breakdown of that. Sufficient, and then appropriate audit evidence. So when we say sufficient, what does that mean? Sufficient simply means that the auditor must gather enough evidence. So you don't just gather one or two evidence and you conclude. No, you must gather enough evidence for you to reach a reasonable conclusion. Now remember, the auditor's report is not an absolute assurance, but rather it is what? A reasonable assurance. So when the auditor says, oh, everything is okay, it does not mean it is absolute, but it is based on the judgment of the auditor. So it's a reasonable assurance. But before you can reach that reasonable assurance and issue that report, you must gather sufficient evidence. It means the auditor will ask himself, is the evidence gathered enough for us to reach a conclusion in order to issue an auditor's report? So sufficiency of the audit evidence simply means, have we gathered enough audit evidence? Appropriate, on the other hand, has two wings that we need to look out for. It means that the auditor must gather relevant and then reliable audit evidence. The auditor must gather relevant and reliable audit evidence. The auditor must gather relevant and reliable audit evidence. When we say relevant audit evidence, it means that the evidence must relate to the assertion being tested. So for instance, if you need information about debtors and the company is giving you an information about the employees, I mean, that's not a relevant information for you. So you are asking the CFO or the chief finance director of the company about debtors, then he's giving you information about employees. That is irrelevant. So when we are gathering the audit evidence, we must ask ourselves, is this evidence relevant to the assertion being tested? Is this evidence relevant to the thing that we are considering, to the thing that we are examining that is relevant? Reliability simply has to do with the quality of the audit. Now usually, generally, appropriateness means the quality of the audit. So let me put that in general. The quality of the audit. So relevant and then reliable. Reliability simply means, okay, what is the source of the audit? Number one, an audit evidence obtained directly by the auditor is more reliable than an evidence provided by the client entity or third parties. So an evidence that is self-identified by the auditor is more reliable than what third parties or the management provides the auditor. Number two, original documents are more reliable than photocopies. So for instance, we are looking at title deeds and they are bringing us photocopy title deeds. I mean, who does that? We won't see it as being reliable. But if it's the original document, then it will be reliable in relation to that. So when it comes to audit evidence, we as auditors, we must gather what? Sufficient and appropriate audit evidence. Now, the sufficiency and the appropriateness of the audit evidence all depends on the judgment of the auditor. So if I am the auditor, I will decide whether the evidence that I've gathered is enough, whether the evidence that I've gathered, it's okay to enable me to reach my conclusion to issue my auditor's report. Then I have to decide whether the evidence I've obtained is reliable or is not reliable, is relevant or irrelevant. This is also another key area that you have to look out for as an audit and assurance student. Okay, so let me pause a moment and then take some questions if possible. So those of you on the Zoom call, if you have any questions, you know what to do. Put it in the chat, in the group chat here on Zoom, or you can raise your hand by clicking on the raise hand button. I will get an indication, then I'll call you in, and then you can speak to us directly and ask your questions. And for those of you watching on YouTube also, put your questions in the chat box. This is supposed to be a Q&A session, but you guys have left me to teach some. So bring it on. Any questions for me? Let me see and address some questions quickly. Maybe I explained something you didn't understand well. You want more clarity on it, something like that. Or there is another thing that you want me to talk about. You can indicate by raising your hand here on Zoom. Then I'll call you. Then for those of you watching on YouTube, you can put it in the chat box, and I'm going to be replying to that as well. Okay. Let's see, do we have some questions coming in? Okay, no questions. Okay, so let's proceed. So we've spoken about audit appointment of the auditor, spoken about audit planning, spoken about audit procedure, spoken about audit evidence. After that, another key aspect that we need to understand is reporting. And this is more serious even for advanced audit and assurance students. So reporting. I see a question on the Zoom chat. Miles said, please, what influences the auditor judgment as to what sufficient appropriate audit evidence is? Okay. So Miles, what influences the auditor's judgment is based on his understanding of the client entity as well as what he is looking for. So it depends on the auditor's understanding of the client entity. Because for instance, if we assess that internal control systems are weak, then it means we need to do a lot of work to gather audit evidence. But if we come and realize that, oh, internal control systems are strong, for that reason, we will undertake risk-based audit, which means we just identify the key risky areas and we audit, then we will do less work. So since we are doing less work, it means we will not gather as much evidence as possible. So as to whether something is enough, something is reliable, something is relevant, will all depend on the auditor's understanding of the client entity and what he is looking for to achieve with the procedure or the audit that is undertaken. Because you see, at the end of the day, that is why at the planning stage of the audit, the key thing we mentioned was what? Understanding the client entity. So when we understand the client entity, know about the client entity, then we can assess whether the evidence we've gathered is enough for us to be able to reach a conclusion. And if it is not enough, we will do other works. So what affects the auditor's judgment is based on his understanding of the client entity and the procedure or what the assertion being tested for in relation to that. So Miles, that is the answer to your question. Any other questions for me? Okay. So now we have been appointed. We plan our audits. We have undertaken procedures. We've gathered audit evidence. Now we come to the final stage, reporting. Now, in between reporting and the audit procedures is internal auditors. I may not talk about that here though, but that is also another thing that we have to look out for, especially for level 2 advanced, those of you doing audit and assurance. But those of you doing advanced audit and assurance, that's also something that you have to look out for. So let me shed a couple of lights on some things even before I come on the reporting. One of the things when the auditor is undertaking the audit procedure is that the auditor is going to be using the work of the internal auditors or the work of an expert third parties. So if we are using the work of an expert third party, what factors do we take into consideration? This is a critical area. If we are using the work of the auditors, what factors do we also take into consideration? When it comes to the auditors, we have to look at their organizational status. When we say organizational status, what do we mean? It means that where they stand on the scope of the organization. Do they have a lot of authority? Does the board take them serious? Or when they make a recommendation, is it considered? Who do they report to? So the organizational status of the internal auditors is something that is critical that we have to look at. And then not only that, we need to look at their qualification, because if the internal auditors are just first degree holders, now with all due respect, if they are just first degree holders, they don't know anything that much about accounting, really how financial statements are prepared, because what you do in first degree is nothing to write home about in relation to preparation of real financial statements and putting in place internal controls in relation to that. So we must look at the qualification of the internal auditors. Then we must look at their independence as well as internal auditors. But that is a very debatable field about the independence of the internal auditors, because they are employed by management and they are there to report directly to management and to those charged with governance. So usually their independence is some way dicey, but we must consider that in relation to that. So their organizational status is the first thing that we consider as auditors. Their qualification, like I said, they should be members of a reputable regulatory body like the ICAG Ghana here, and then they should, we have to know about their independence. When it comes to third parties, now when we say third parties here, we are talking about valuers. So let's say during the year, the entity revalued its assets. So the valuer that came to revalue the asset, we are going to use his report. So if we are using his report, how do we rely? What factors do we take into consideration to say, okay, we can rely on his report or not? Or the company engaged another accounting firm or another company to prepare its tax. We are going to be using that tax in order to audit when we are auditing the company. So what factors do we take into consideration when using the work of expert third parties? Certainly, we must look at their qualification. It's very, very critical. Do they qualify to do what they are doing? So like I said, somebody is a degree holder and the person is working around valuing assets. I mean, you don't qualify to value assets. Or somebody is a first degree holder and the person is doing tax for companies. You don't qualify to do that. So qualification of the expert is very critical, something that we have to look out for. Second thing would have to do with the experience of the person. Is this the first time the person is doing this kind of job? Or it is something he's been doing over the years? So the experience of the person is very, very important as well. the third thing, which is very, very important, is also the independence of the third party. So who is the third party? Who is the third party? Something that is very, very critical that we need to look out in relation to that. So what is his level of independence? We must look at that in relation to that. Is he independent? Now, if the person is an employee of the company, then we know he's independent. He's not, he cannot be relied on in relation to that. So his independence is in jeopardy. Or if it is the board chairman's company that did the revaluation or that did the tax, then that is also something that is quite worrying that we need to consider. So his qualification, his experience, his independence. Another thing that is critical for us to consider also is the assumptions that were used in carrying out his work, especially if the person was valuing properties, what assumptions did they use? For instance, valuing a property in Dansoman is different from the value of the same kind of building in Dakoman, and may be different from the same kind of building located at East Legon or at the airport residential. So what assumptions did the person use to look at it? And we have to assess the reasonability of the assumptions of the thing. So as we are carrying out audit procedures, as we are gathering audit evidence, definitely we will be using the work of experts. So these are some factors that we have to take into consideration. If they are experts, these are the things we look at. But if they are internal auditors, like I said, their organizational status, their independence, their qualification, all of that would have to be considered. So I see a comment from Chino. He said, good evening, sir. Hope everything is okay. Yeah, Chino, everything is fine. I believe you are also doing well. Okay. So now let's go to the reporting area. So if you have any questions, you know what to do. You click on the raise your hand button and then I call you up here on Zoom, or you can put it in the chat box and I'll be reading that as well. For those of you watching on YouTube also, you can put your questions in the chat box. I'm reading all of your chats as well to answer any questions that you have. And give us a thumbs up as well on the video to get more engagement on the video. That way YouTube will be able to push it to others to watch in relation to that. So let's look at the next thing is reporting. Remind me to talk about quality, okay? In case I forget. Reporting. So we've been appointed, we've planned the audit, we've undertaken the audit procedure. Now we are concluding the audit to issue our auditor's report. So at this stage, what do we do? Now, when it comes to reporting, we look at the issue about review. So the organization is going to be doing some review on everything that they have done, all the evidence that they have gathered. They will review it and look at the reasonability of the evidence that they have gathered, whether the evidence are enough to be able to enable them to make a conclusion and issue a reasonable auditor's report in relation to our assurance in relation to that. So we review. Not only that, at the reporting stage also, the auditor will deal with the issue about subsequent events. And like I said, this is more in the level 3, even though it's in the level 2 audit and assurance, it is also quite serious in the advanced audit and assurance. So subsequent events. Now, this is according to IAS 10, events after the reporting period. Subsequent events are the events that are happening from the reporting date till the time the financial statements are authorized or are signed. So as auditors, we must identify all those subsequent events and be able to determine the one that are adjustable and the one that are what? Unadjustable in relation to that. So adjusting events and then non-adjusting event, that's the right word. Adjusting events and then non-adjusting events. Please note that when you're dealing with subsequent events, there are certain events that on the face value, they are unadjustable. But if the event will affect the going concern status of the organization, then the event will become adjustable. Now, let me explain that. Let's say there is a fire outbreak at our factory, and that is the only factory that a company has. So there is a fire outbreak. Okay, fire outbreak is a subsequent event, but that is a non-adjusting event. But if that is the only factory the company has and there was no insurance on the factory and that factory that has burned, it will be difficult for the company to put up a new factory like that and also continue to produce its product. That means that that non-adjusting event will become what? An adjusting event because it will affect the going concern status of the company. For that reason, the company must now prepare the financial statements not on the going concern basis, but on a breakup basis. So you got to be careful when it comes to adjusting and non-adjusting events because some events on the face value may be non-adjustable or non-adjusting events. But if they will affect the going concern status of the organization, then they become adjusting events in relation to that. Then the third thing, I've already mentioned that going concern. This is very, very critical, especially for you guys in level 3. Many of the banks that were collapsed or that collapsed that were amalgamated had issue about going concern. And the reason why the Institute of Chartered Accountants, or partly the reasons why the Institute of Chartered Accountants gave penalty or fined to some of the audit firm for the collapse of those financial institutions was because of the going concern, partly because of the going concern. So as an auditor, you must look at the indicators of going concern, that is things that are showing that the entity cannot operate into the foreseeable future. So we must look at the indicators of going concern. But not only that, in as much as you'll be looking at the indicators of going concern, you must also look at the mitigating factors. So as an auditor, you must understand the indicators and you must look at also the mitigating factors. Now, let me explain that in a simple language. One of the indicators of going concern is a loss of key customer. So let's say I produce Sobolo. So my company, Nhyira Limited, produces Sobolo. So Nhyira Limited produces Sobolo. And every day we produce, let's say, 10,000 bottles of Sobolo. Let's say that Wet Seal Small buys 8,000 every day from us. Okay, so we produce 10,000 bottles of Sobolo, and Wet Seal Small buys 8,000 bottles from us every day. Then all of a sudden, Ghana Standard Authority, Food and Drug Authority came to our factory and they said, oh, our environment is not hygienic, so we need to fix one or two things. Now, immediately West Seal Small heard that, they decided that they won't buy from us again. Now, we've lost a key customer because West Seal Small buys 80% of our sales. That is an indication of going concern because that key customer we've lost could mean that going into the future, who are we going to sell with? Who are we going to sell to? So that could be a going concern issue. But if the entity has a mitigating factor, then it's no more an issue. Now, what is a mitigating factor? A mitigating factor is simply a solution to the problem. So the problem is that we've lost our key staff. But if during the year, as we lost, your friend is saying, well, sales more, we've signed a deal with ANC More. And now ANC More says they will buy every day 15,000 bottles from us, or maybe even still 8,000 bottles from us. That means even though we've lost a key customer, because we've signed a new deal, it is a mitigating factor. For that reason, it is no more a going concern problem. So not only should you identify the indicators, you must ask yourself whether the entity has a mitigating factor. And the auditor must assess the accuracy and the reliability of the mitigating factor. So if I tell you, you are my auditor for Nhyira Limited, and I say, we've signed a deal with ANC More, you as an auditor, professional skepticism, you don't pick it from me. What do? You must verify it. What is the statement or what is the contract we've signed with ANC More? And then you have to request to speak to ANC More. And I should allow you to speak to ANC More if we have signed a deal with ANC More. If I prevent you from speaking to ANC More, then I'm lying. So if you speak to ANC More and the ANC More confirms and say, oh yes, we've signed a deal with Nhyira Limited, we'll be buying 8,000 bottles of Sobolo every day, and we're actually looking at increasing it because their products are of a good quality, then even though, like I said, there is an indicator of going concern issue, we losing Accra, West Hills Mall, there is a mitigating factor that we have signed a new deal with ANC more in relation to that. So there are a lot of indicators of going concern, but we have to always look at what? The mitigating factor. Another thing is loss of a supplier. So a supplier who supplies our raw materials for us to produce Sobolo, I don't know what they use to produce Sobolo though, but they said they use leaves and some things. So let's say the leaf, ginger, and the things we use for the Sobolo, the people we buy it from, all of a sudden they say they won't sell to us again. That is a going concern problem. But if we have identified an alternative source to get those things, then it is not a problem any longer. It won't affect our going concern. So maybe the supplier said they won't sell to us again. Now, we've identified a new supplier and we've given that supplier money to grow the leaves, to grow the ginger and everything, so they sell back to us. That means, yes, there is an indication of going concern problem. We losing our suppliers, but there is a mitigating factor because we've signed a new deal with another person and we've even acquired them or giving them money to do it. So it's a very, very critical aspect, especially for you guys doing advanced audit and assurance, to look at going concern, because the examiner will definitely throw something at you from going concern in the exam hall. Definitely, he will throw something at you. So you got to make sure that you understand that very, very well. So review subsequent events, going concern, and the indicators and mitigating factors. Then the last thing about underreporting, or the next one under reporting, is the issue about other information. There are other information that you must consider when auditing a company, not only the financial statement. So you must consider that you must audit the management minutes, the director's reports, and all other internal control, management accountants reports, internal auditors reports. All of that, you must assess all of that, audit all of that. So as an auditor, at the reporting stage, you must review all of this because we want to find out whether there is consistency in the financial statement. Because for instance, if the entity has bought an asset for say $2 million, we want to go and see the management minutes, whether it was approved by management that they should buy. So if in the management minutes, they said they will buy the asset or they will lease the asset for maybe $100,000 every year, but in the financial statement, you are seeing that they have bought the asset for $2 million, then there is inconsistency. Then you have to inquire further from management, what the heck is happening about this asset? So you have to consider other information, the management minutes, the director's reports, management accountant reports, internal auditors reports, and all other information before you can actually undertake your audit in relation to or conclude upon your audit in that case. Once you are through with all of these things, you can now do the last one, and that is the issue the auditor's report itself. So you can now issue the auditor's report, and there are we have the modified auditor's report, the unmodified auditor's report, in which you can express either an unqualified opinion, everything is okay, qualified opinion, everything is okay with the exception of diverse opinion, nothing is okay, disclaimer opinion, where he said we cannot express any opinion on this financial statement. So that is the auditor's report in relation to that. So number one, you are appointed, we plan the audit, we do the procedures, we gather audit evidence, and then what? Reporting. Then in doing all of these, one key aspect that you have to also look out, because the examiner will certainly ask you a question on, which is the last thing I'll be sharing with you today. Then I'll take some questions, will be ethics. Okay, so fundamental codes of ethics: integrity, objectivity, professional competence and due care, professional behavior, confidentiality. Whether you like it or not, there is a question waiting for you in the exam hall. A minimum of 10 marks. It's a done deal. Now here, the examiner will give you a scenario. Then we'll ask you, what is the ethical issue in this question and what appropriate action must the auditor take? So you must identify the ethical issue, which will be threats to fundamental ethics. Then you bring it back to the ethics that is being breached, and then you now decide what appropriate action that has to be taken. So for instance, let me give you an example in how that question could be said. So there is an illustration that the accountants of the company told the auditor to assist her in the preparation of the tax returns for the company. Now, and the auditor accepted and do it, or this is the circumstance, what should the auditor do? Remember I told you that the auditor cannot be involved in the preparation and presentation of financial statements. So the auditor accepting the deal will be a self-review threat, okay? Because he's now going to be preparing the financial statement. Now, once there is that self-review threat, and now he's being relative, or the accountant will pay him for doing that, there is going to be some familiarity threat, and certainly there is going to be some self-interest threat, and all of these threats will affect the objectivity of the accountant, the judgment of the auditor. So that's the concept there. So ethics, definitely the examiner is going to be setting some questions around that. Then finally, it's quality control. That is ISA 220. ISA 220, and that is quality control for audit of financial statements. This is especially for advanced audit and assurance, quality control for an audit of financial statements. So for those of you doing advanced audit specially, every semester there is a regular customer as well. The examiner is going to be setting question on this in relation to that. So basically, when it comes to audit and assurance, advanced audit and assurance, these are some issues that you need to understand. And then for those of you doing advanced audit and assurance, remember there is public sector audit there. And when we are dealing with public sector audits, you remember that there has to be the issue about INTOSI, or I don't know how that thing is called. INTOSI, that is the International Organization for Supreme Audit Institutions. International Organization for Supreme Audit Institution. That's an institution made up of Supreme Audit Institution. In Ghana, the Supreme Audit Institution is the Auditor General Department, and then the head of the Supreme Audit Institution in Ghana is the Auditor General. So for those of you doing public sector audits, remember to understand the INTOSI and those issues about public sector audits. Okay, so I see a comment from Miles on the Zoom chat. Please, with regards to performance to test for the level of material, 1% be chosen and 2% when it comes to testing the materiality of revenue. Okay, so okay. So the materiality level, as always, like I said, will depend on the understanding of the client entity. The 1%, 2% of revenue of assets are just guiding principles. So depending on the auditor's understanding of the client entity, the auditor may decide whether he should set the materiality level at 1% of revenue or 2% of total assets. So it all depends on the judgment of the auditor and the understanding that he has of the client entity, because it is the understanding he has. If the entity is very risky, then the materiality level is going to be very low. So you will set the materiality level very low so that any minor thing will be considered as material. But if the entity's internal control is effective and efficient, then the materiality level will be set very high, because we are not doing as much work as possible because internal control systems are working well. So Miles, it all depends on understanding of the client entity and the assessment of the risk of material misstatement. That will guide the auditor in order to set the materiality level, or yes, the materiality level for the organization in relation to that. Okay, so Miles said, well noted, thanks a lot. You're welcome. Okay, so YouTube, You have any questions for us? Okay, so I'm gonna be concluding around this place today, since I don't have much questions coming in for me anymore. So if there are any other questions, you know what to do. You indicate, and I'll be taking your questions in the few minutes. For those of you watching on YouTube too, you can put your questions in the chat box, and I'll be answering all of them for you in relation to that. So if you look closely, you realize that I've actually taken you through the entire syllabus of audit and assurance, and I've mentioned the key issues that you need to understand. What you need to now go to do is to read upon them in that case. I think I was notified today by my social media manager that we don't have enough content on the channel on audit and advanced audit. So on my YouTube channel, I was notified that we don't have enough content on these two subjects. Because I was doing the class today, my social media manager had to look at the playlist and the content we have, almost 380 videos so far, but there are less content available on audit and assurance and advanced audit and assurance. So for that reason, in the coming weeks, we will be releasing some content on audit and assurance and advanced audit and assurance, and I'll be doing some live streams as well, where we pick some of these things one after the other, delve deeper into them, and I'll be able to answer your questions in relation to that. So that is what you have to understand about what we're planning to do going forward for the examination. So I'm going to conclude here today, and thank you very much, you guys, for taking time to join the stream. I believe that it was a productive session. It was a session that assisted you to understand a couple of things. My objective, as always, is to provide you with that assistance in relation to that. That is why this week we put it down to do this executive Q&A session, and to be able to answer a lot of questions for you guys. Miriam said, thank you very much for your time.
Thank you
Miriam,
very much, sir. God bless you.
all right, amen. Thank you too. Thank you too. Miles also said, thank you too, sir. God bless you. Amen. God bless you too. So that is what we seek to do. That is why we put this week together to be able to go through these Q&A sessions. But one thing we realized, I realized in the course of the week, was that many of you enjoyed the session we did from Monday till today. For that reason, even though I wanted to do this for only 5 days, we're going to be extending this possibly from next week as well. So for those of you who have not subscribed to my YouTube channel, make sure you subscribe to the channel, and then also follow me on Facebook, because we'll put the Zoom ID and the various things we'll be doing every day on the various social media platforms, so that I'll be able to do more of these for you guys as you are in your homes and your offices. I'll be able to assist you to study more and prepare well for your examination in relation to that. That's my objective, to be able to assist you more. So just share the channel with your friends, with your colleagues, with your loved ones, your WhatsApp groups and everything. Just share the channel with them and let them know that they can come on the channel all the time and get some content on various subjects, on various topics, to enable them to prepare well for the examination in relation to that. So thank you. Remember, coronavirus is still here. So make sure you sanitize your hands regularly, wash your hand under running water, wear your face masks when you go out, keep social distancing. And when you feel anything around you, make sure you go to the hospital and get tested as soon as possible, so that you will not spread the disease and affect the people who are dear to you in relation to that. So thank you very much, and take care of yourself. Enjoy your weekend, and I will see you again some other time next week. Tomorrow we'll be releasing some videos on the channel. Sunday too, we'll be releasing some videos on the channel as well. But we are looking at whether I'll be coming in to come and do some live stream or some Q&A session. So just keep following me on the Facebook, and other platforms, and subscribe to the channel, because whatever notification, we'll be sending them out for you. For those of you who have any inquiry or anything you want to ask, you can reach us on WhatsApp or call us directly 050-114-9296, 050-114-9296, 050-114-9296, and you can reach us directly. Maybe you want some books, or you want to enroll in a course online and study under my mentorship, or whatever it is, you can reach us out on that. So thank you very much. Take care of yourself and have a blissful weekend. Bye-bye.